The auditors signed off on the reports. They were all lies. Wirecard, once heralded as Germany's fintech marvel, crumbled in a spectacular collapse, leaving a gaping €1.9 billion hole in its accounts. Founded in 1999 in Munich, Wirecard had transformed from a struggling startup into a powerhouse of digital payments. In just over 2 decades, it went from obscurity to being celebrated as a pioneer in financial technology, boasting a market valuation that soared to over €24 billion at its peak. Its journey was marked by ambition, audacity, and ultimately deception. At the helm was Markus Braun, a visionary CEO with a penchant for futuristic ideals and aggressive growth strategies that pushed Wirecard into the prestigious DAX 30, Germany's stock market index, alongside giants like Siemens and BMW. But beneath the surface, a sinister reality festered, hidden behind layers of deceit and manipulation. Wirecard's rapid ascent was anything but ordinary. In 2002, after the dot-com bubble burst, it flirted with bankruptcy, only to be resurrected through a reverse takeover of a defunct penny stock, a maneuver that set the tone for future manipulations and risky gambits. By 2011, armed with €500 million in fresh capital, Wirecard embarked on a spree of acquisitions that raised eyebrows across the financial world. It expanded aggressively into Asia and other emerging markets, acquiring companies and assets that seemed to bolster its balance sheet, but were seldom scrutinized in detail. The company's practices grew increasingly opaque, and whispers of wrongdoing began to circulate within the industry. Yet, the allure of Wirecard's success story was irresistible, overshadowing the mounting red flags that were becoming harder to ignore. Enter Dan McCrum, the Financial Times journalist whose dogged investigation would eventually unravel the tangled web Wirecard had spun. In 2019, McCrum published a series of damning articles exposing potential accounting irregularities. His findings painted a picture of a company engaged in massive fraud, with fictitious profits and dubious deals. Despite the gravity of the allegations, Wirecard's influence was formidable, and McCrum faced a barrage of lawsuits and intimidation tactics, including surveillance and legal threats. But the truth, as it often does, found a way, driven by McCrum's unwavering commitment to uncovering the facts. The tipping point arrived in June 2020. Wirecard's auditors, Ernst & Young, announced that they could not verify €1.9 billion supposedly held in trust accounts, refusing to sign off on the company's financials. The revelation sent shockwaves through the financial community, and Wirecard stock plummeted by 72% in a single day. Just days later, on June 25th, Wirecard filed for insolvency, and Markus Braun was arrested, marking one of the most dramatic corporate collapses in European history. The facade had shattered, exposing a vast conspiracy that had ensnared investors and regulators alike. The magnitude of the deception was staggering, revealing a complex web of sham transactions and phantom revenue streams designed to inflate the company's financial health. Wirecard's downfall was a testament to systemic failures. Despite glaring inconsistencies and allegations of fraud, the company continued to thrive, bolstered by a culture that glorified growth at any cost. Investigations revealed deep ties to illicit activities, including the laundering of $1.5 billion in gambling proceeds. The complicity of auditors and executives created an environment where deceit thrived, unchecked by ineffective regulatory oversight. Germany's financial watchdog BaFin faced sharp criticism for its lack of timely intervention, having focused more on investigating journalists like McCrum rather than the company itself. This regulatory inertia allowed Wirecard to perpetuate its fraudulent activities for years, deceiving even seasoned investors. The human cost was staggering. Overnight, 1,700 employees found themselves jobless, and investors, including notable firms like SoftBank, faced losses in the hundreds of millions. The scandal wiped out billions in shareholder value, leaving countless individuals and institutions grappling with the financial fallout. Germany's reputation as a financial hub was tarnished. sparking calls for sweeping reforms in corporate governance and financial regulations. The Wirecard scandal became a cautionary tale of unchecked ambition and ethical compromise, prompting introspection within the financial industry and a reevaluation of the frameworks designed to protect against such malfeasance. As the dust settled, the lessons of Wirecard's rise and fall echoed loudly. Dan McCrum, reflecting on his role, remarked, "At times I thought I was going crazy," highlighting the surreal nature of unraveling such a colossal fraud. His perseverance was a testament to the importance of investigative journalism in holding powerful entities accountable. In the end, Wirecard's story serves as a grim reminder of the perils of prioritizing growth over integrity. It underscores the need for vigilance, transparency, and accountability in the ever-evolving landscape of fintech and beyond. The collapse of Wirecard is not just a story of corporate greed and deception. It is a stark warning to regulators and investors alike about the dangers of complacency and the critical need for robust oversight mechanisms in the global financial ecosystem.